Many people get life insurance through work and think, cool, I've got it covered. While it's awesome to have that benefit, I'm going to share why your employer's life insurance may not be enough on its own to protect your family. There are a couple of big pitfalls to be aware of, highlighted by a real case I encountered that drove this point home. Meet David. He was in his late 30s, married with one child, and he had a decent life insurance policy through his job, about 1 year's worth of his salary and coverage. Tragically, he unexpectedly passed away. His wife, Sarah, later told me she had assumed their workplace life insurance would be sufficient to take care of things. But when all was said and done, the policy paid out roughly $60,000, about a year's salary for David. Now, $60,000 is certainly helpful, but let's put that in perspective. That might cover the mortgage and living expenses for maybe 1 year for Sarah and their child. David was 39. They had decades of income that they were going to miss out on. Sarah quickly realized that money would not stretch very far. Within a year, she was facing financial strain, having to downsize their home and make some really tough budget cuts. The reality hit. What they had from the employer plan wasn't enough to secure their family's future. This is something I see a lot. Companies often provide life insurance as a benefit, but typically it's either a flat amount, like $20K, or a multiple of your salary, 1 time or 2 times your annual pay. In fact, the median basic coverage offered at the workplace is either a flat $20,000 or just 1-time salary. That is far less than experts recommend for most families. Financial planners often suggest having life insurance coverage around 5 to 10 times your annual income, depending on your family's needs, debts, number of kids, etc. The reason is to ensure that if you're gone, your family can replace your income for many years, pay off a mortgage, fund college, etc. 1 year's salary just doesn't do all that. There's a telling statistic. More than 4 in 10 households, 42%, that only have workplace life insurance say they'd face financial hardship in just 6 months if the primary earner died. That means by the 6-month mark, the work policy money would run out and the family would be in trouble. That's a big warning sign that employer coverage alone often isn't cutting it. Another big issue? Job changes and job loss. Employer life insurance is usually not portable, meaning if you leave the company, you can't take the policy with you. Some plans offer conversion to an individual policy, but it's often at a high cost. So if you switch jobs, you might have a gap before new coverage kicks in. Or if you go from a job that had coverage to one that doesn't, suddenly you're uninsured. Worse, if you develop a health issue while you had coverage at work and then lose that job, you might find it harder or more expensive to get private coverage later. I've seen this happen. A man in his 50s left a job to start a business. He had 2 times salary coverage at his old job, but that ended when he left. A year into building his business, he had a health scare, minor heart attack. Now he wanted life insurance, but premiums were much higher due to his age and health change. He regretted not getting his own policy earlier. And think about this. If you become too ill to work, say a diagnosis that forces you to quit your job, you might lose your life insurance coverage from the employer right when your health has deteriorated. A double whammy. That's not a risk you want for your family. So what's the solution? Treat your employer's life insurance as a nice supplement, but not the main plan. By all means, take advantage of it. It's often free or very cheap through payroll. But consider buying an individual life insurance policy that you control and that stays with you no matter where you work. With your own policy, you can choose the amount that truly covers your needs. Maybe it's enough to cover the mortgage and provide income until the kids are grown. Then whatever you get from work is just extra cushioning. Having your own policy also lets you lock in a rate based on your current age or health, independent of your job. If you're young and healthy now, you can get a 20 or 30-year term policy at a low rate, and you'll have that coverage even if you change jobs 5 times or decide to freelance or anything else. Your family's protection isn't tied to your employment. Let's address another common thing. Some people think, my work coverage is free, why should I pay for more? Well, it's sort of like health insurance. Your employer might give you basic coverage, but you wouldn't rely on a basic plan if it didn't truly cover your needs, right? Same with life insurance. A little free coverage is great, but if it's not enough, it's on you to fill that gap. The peace of mind is well worth the cost of an extra policy, which, as we discussed in Script 6, is usually quite affordable when you're relatively young. To recap the key reasons your work policy isn't enough. 1. Coverage amount likely too low. One-time salary won't last long for your family. 2. Coverage isn't guaranteed. You could lose it if you change jobs or can't work. 3. You have no control over it. Your employer could even reduce that benefit, or you might forget to update beneficiaries, etc., since we tend to set and forget job benefits. In David's case, if he had owned an additional individual policy, Sarah and their child would have been in a much better position financially. It's a tough lesson and one I hope others can learn from without experiencing it. So do this today. Check how much life insurance your job actually provides. Then ask yourself, if I wasn't here, how far would that go for my family? If the answer is not very far or only a year or two of expenses, consider getting your own policy to close the gap. On crockerfinancial.online, link in description, we have a simple needs calculator that factors in your income, debts, and family needs to estimate how much coverage is appropriate. Use it, and you'll likely see a number higher than what your employer offers. Don't rely solely on your job. After all, you insure your car and home on your own. Your family's well-being deserves at least that level of protection. I'm here to help if you need guidance.